Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com.
Well, welcome to another Workshop Wednesday brought to you by schoolofbookkeeping.com, which is all about casual conversations for serious workflows. It's nice to see you, Rachel, in your School of Bookkeeping uniform.
Yeah. Well, it's more of a t-shirt than a uniform, but yeah.
Well, you know, we start off small here and grow with you as you grow your practice in your firm.
Yeah.
Couple things about the Earmark CPE credit. We're super excited to now being able to offer that just for joining us on a weekly casual conversation. Our channel is now live at Earmark, so we do have 3 prior workshops that are there and are eligible for CPE credit. I did put them in the chat, so that should be circulating to the social channels as well. So you can
thousands of people are clicking on it right now.
Yeah, I can see.
Earmark is so awesome, though. I love it.
Yeah, and the way it works is that you can do a free level, which allows you to I believe you can do one a month there, but if you subscribe to Earmark,
wait, I thought it was one a week. I think it's one a week.
One a month. I don't know.
I have the free version. Let me check.
Nancy's on YouTube. Maybe she can tell us, because we were talking a little bit about the last time we talked on the QB Power Hour about Earmark. But I know it was there's a free level which gives you a certain amount, or a paid level which gives you unlimited, right?
Yeah.
When you're at that CPE crunch and you and you just need some CPEs, Earmark is really great for that, because you don't always need to go to School of Bookkeeping to do that. You can just listen to anything that tickles your fancy.
Yes, it's one a week. You get one a week.
Okay.
Yep. Nice. Or you can subscribe for $149 a year, but it's endless. And there's a zillion podcasts on here. And it's awesome because a lot of different people in our industry need CPE. It's very important.
Yeah, Nancy McClelland is the dancing accountant is on there as well. So if you don't like what you hear from Rachel and myself, you can just pop on over to Nancy and listen to her.
Yeah, or you can ask the CPA, because that's her specialty.
That's her jam.
Mm-hmm.
All right. Well, today we are going to be speaking of asking a CPA. She says, we click page not found. Well, I'm right there on the School of Bookkeeping Earmark channel. So I'm going to try to copy and paste that again. So let's see here. Who knows? This is the dangers of doing a live webinar and sharing links, but we'll be sure to update the link if it's not. But I just copied it from our channel, so
Or
it's
you
there.
can just
So
get the Earmark app
yeah,
on the
search
Play
for
Store, App
school
Store.
bookkeeping, and then you're there. So today we're going to be talking about tying QuickBooks Online to a tax return, and this is something that we've had at School Bookkeeping for a while, as far as a utility or a download that's available. You do have access to it if you're a member of School Bookkeeping, even the free level. Because we like to, give things away here. So let me just make sure I've got the QR code up here in the corner there. So there is the QR code to be able to scan that and access the template. I'm going to be sharing and walking through because we've made some tweaks to the template to be able to do that. But let me go ahead and do that here. There we go. All right. So there's in our section called downloads and resources. When you subscribe to School of Bookkeeping, you'll have a library of things that you can access. One of them will be downloads and resources, and then you can go in there and take a look at this one. How to make the balances agree a starting point is the topic there. And the use case here is, if you're starting, bringing on a new client that has a mess, they have made a mess of their QuickBooks. Never happens, right, Rachel?
Never.
A lot of times, I mean, my brother-in-law is a prime example, right? Like he's a painter, and he paints, and he is the face of the business. He's wearing a lot of hats. He primarily uses QuickBooks Online to bill his clients, right? Like, and that's typically where they want money coming in, but they're not necessarily too concerned about the money that's going out, right? They just make sure that they can pay for their stuff. They don't necessarily connect their bank accounts or categorize things appropriately, but they do file their taxes every year or so. So this allows you to come into a mess of a situation and draw that line in the sand, right? Or maybe you've done a migration from QuickBooks Desktop to QuickBooks Online, and some things, garbage in, garbage out, when it comes to those types of things. So if they've been playing around in the garbage, and don't expect QuickBooks Online to sift through that and put the recycling where it's supposed to go, the compost. It doesn't change the way things go over. I had one client who had a sales tax agency of Citibank, right?
Oh, yeah.
It put all of their sales tax payables to their vendor Citibank, and rather than go.
Sometimes the things I see are funny. Usually, what I've kind of come across the most is, I would say, people just very well-meaning, just don't really understand.
Yeah.
They use QuickBooks more as an invoice machine rather
Right.
than a comprehensive software for the entire financial picture. So that's something that I've definitely stepped in a few different times.
Or they've done this mixture of the two. They've connected their bank account, and they're using QuickBooks to invoice and receive payments and those types of things because of all the cool things that QuickBooks allows them to do. But there's a disconnect between the bank feed and the bank deposits and the workflows that should have been matching to that bank, said bank feed, right? Yeah. I mean, that's the crux of your business name, right? The whole net deposited is where they're just accounting for their revenue on a deposit, as opposed to the workflows of estimate leads to invoice, leads to payments, leads to the deposit, and then the fees and whatnot.
That's not necessarily the worst thing in the world if they really just kind of want to look at it like cash in, cash out. Right. But you still have to kind of think about, we're recording all these transactions for financial statements. So we want to make sure that everything is going in correctly.
All right. So you'll want to have two things handy when you're ready for this. Is one, there's the last filed tax return, because that's the date that you're just going to draw that line in the sand, because that's the last thing that the government knows about. And then you want to pick up moving forward from that. And this template, this Excel template that we've put in School of Bookkeeping, will allow you to do that pretty smoothly. And I'm not going to make a claim that it's going to blow your mind, but it is just a nice tool to have, right? Now, there's some things to consider here when you're before you get too excited about this template. There's going to be, a lot of times there's you're changing tires on a moving vehicle, right? So if you're going to make that line in the sand as of the end of the filing period, there's probably going to be some things that were lingering in that tax year that you may want to account for as part of that line in the sand, right? And one of that would be your bank balances and reconciliations if you have some outstanding transactions. And I'm not talking about, yay, these transactions are super cool, they're outstanding. No, they haven't. These are great transactions. They're better than that. They're outstanding. Thanks for the courtesy laugh. Heard that all the way from Michigan. But those outstanding transactions, you want to make sure that those are entered in before you make this adjustment. Otherwise, if you add them in after you make the adjustment, then you need to adjust the adjustment. So keep that in mind. Open receivables and accounts payables, right? You want to make sure that those are entered in. This is all prior to that date that you're making that line in the sand, right? So make sure that those are there. And then, of course, some inventory issues, same verse, same as I put in here, different verse, same as the first, right? Making sure that inventory is accurate as of that start date before you make that adjustment. You can make the adjustment, but just bear in mind that if you go back to that, prior to that starting date, then that's going to cause some adjustments to your adjustment. So you'll want to make sure about that. All right, so here's the steps here, and I'm going to walk you through, and we're going to try this in a sample QuickBooks Online file. All right, but the steps are in here. Once you have access to the template, you'll have access to these steps as well. And we're gonna take this video and put it at the top here to update it on the new one here. So the video's here. You'll have everything you need to be able to do this. So hopefully it will come in handy.
Dan,
right?
Can you explain why anybody would even have to enter starting balances? What's the purpose for that?
Well, the whole idea of a balance sheet, right, is an ongoing balance from the beginning of time, right? So a lot of times people will just say, well, can't I just pick up from today and move forward? Well, the last thing that you need to, especially with a balance sheet, you want to make sure that balance is accurate as of a certain point, because anything you enter into those balance sheets dictates the ending balance, right? So when you, if you told the government that your overall balance of a particular account is X, right, then you want to make sure that as of that date, it is the same date. Now, profit and loss accounts, income and expenses, those are, I'm going to use an accounting term, transitory, right? Meaning that once that year ends, they're moved or adjusted into retained earnings or net income, and then you move on, because those are the balance sheets that roll forward. Did I get that right? Is that what you were?
Yeah, exactly. I usually use the word temporary, so they're temporary. Okay. Once they get closed out at the end of the year, where a balance sheet sort of rolls along in perpetuity as long as you have assets, liabilities, and equity. So it just is always going from year to year to year hopefully increasing
Yeah.
in retained earnings.
That's always a plus if you increase over time, or if you decrease, then your expenses are reflective of that you're not spending more than you're making.
Yeah.
So this is nothing more than an Excel template that will have multiple things, multiple tabs on it that you can utilize, right? So the form on the first tab is really, it's got the instructions right here again, but really all you want to do there is put in the company name and the adjustment date, the date that you want to make this adjustment, which would be, the closing of the period of the tax return that you have, right? So if it's 2024, great, you're a little ahead of the game. But let's just, for giggles here, we're just going to say this is 2023, right? Which would typically the case, right? You've not filed tax returns because this is 15 days into 2025. If you filed your tax returns already and you're aligning to it, you wouldn't need this to begin with.
Yeah.
So 2023 is our.
Sure that when you're gathering all that information from a potential new client, or if you're.
I missed the first part of what you said there.
Yeah. Oh, I just said make sure you understand when the ending of their fiscal year is, because I just took on a new client. They're July to July, and so it's not always going to be December 31st. Right. So that's really, really important to know. Good point.
If you need to, ask a CPA.
Yeah.
Another nod there to Nancy. Okay, so the first, this is where you would do the majority of your of the magic here, right? This white area is stuff that you're going to get from QuickBooks, and the green area is stuff that you're going to be entering in. So I'm going to swipe on over here to, I'm in Craig's Landscaping, which is just the test drive company. And what you want to do is find the trial balance report. I like to just search for it rather than trying to find it. So here's the trial balance, and you want to run this for the year of your tax return, right? So whatever year that tax return is ending, that's the date that you want to run it through. So we chose 12/31/2023. So we're going to do 1/1/2023 to 12/31/23. There we go. Hopefully there's data in here. No, there's not. Damn it. Okay.
Oh,
so for the purposes of the of this here, we're just going to choose last year. There we go. Which means I got to go over here. Whoops. I scrolled too far and change my date here. All right. Back here. Okay, so I've got my my trial balance, which is the sum of all of my balance sheets up until the end of this year, as well as the balances of my profit and loss for that year, right? Which would essentially be, the other numbers on the tax returns, things that gross receipts and, cost of goods sold and all of the things that you reported on that tax return should be in some way, shape, or form mentioned here in this trial balance, right? Now, if you're using Right Tool, which we love Right Tool, then you can just go over here to, here we go, this guy, and choose this export to CSV, which gets rid of all of the formatting and whatnot of this report when it sends it to Excel. Or you could just copy it to the clipboard, which is ultimately what we're going to do anyway. But let me just choose the export to CSV so you can see it. It downloads the CSV file. Of course, puts it on the other screen.
And you're saying RIGHT Right Tool, and it's a Google extension. There's a free version. You can just get it, and it goes on the right side of your QBO.
And we've had them on as well, and we also have a discount code for you for the Pro, and we're going to talk to you about why you might want the Pro just in this tool. Let's see here. We're gonna. I got to get rid of the top lines here. which is probably a good use case of why you would want to just copy it to your clipboard, right? But here's our accounts and our debits and credits, right? And all we want to do is copy from, it's a little surgery here. Copy your from the first account all the way down to above the total, right? So this grand total here. So we're going to copy that. And then back in our Excel spreadsheet here, put your cursor in the first account and paste it, right? So that has now put your trial balance into this spreadsheet, right? Now what's happening here is it's got the debits and credits, and then this debits and credits in the green is the difference between what you've mentioned over here. So then there's a debits and credits column in this to the right of the account in the green area, right? And you can make some comments in here as well. And there's also a tab here for, just general notes for this particular situation. We go back in here, and then so what you're going to be doing is just aligning the tax return to what QuickBooks says, right? So here the checking account says $2,101. If that's not what was put on the tax return, then just put what was in the tax return. Well, let's say it was $3,000, and we're going to put that in here, right? And so what it does here is now calculates the debits and credits difference between the tax return and what QuickBooks has. And we're just going to go down the line here and just say, well, this is saying that there's a, this is a, there was an $800 savings. So we'll just say if there's no change, or like if it does match, then just leave it blank, right? Like you don't have to go through everyone and put in the exact same amount because it will it will say, actually you do want to put the numbers in here if it's mentioned so that it doesn't calculate a difference between the two.
Wait, let me make sure I understand. So this would be like, I can see if maybe I'm starting a new QBO or something, I can put the balances on, but are you saying like if it's an existing QBO and the numbers don't align to what the prior tax returns are saying, it'll just create adjustments?
Yes.
Okay.
Yes, absolutely.
So you don't have to go back and reconcile old checking accounts or anything like that.
Right. Because that's maybe not part of your engagement of cleaning up their crap from from before, right? So we're picking a point, because they're not going to be unless that's part of it, right? So if you are going to go through and clean up that and it doesn't again align to the tax return, then that's another conversation, right? Like, hey, we're going to need to file an amended return because we've now cleaned up your QuickBooks data. This is the point of where, okay, we're just going to use this moment in time as the moment of truth, align QuickBooks to that, and then move forward from that in our
there's a time to do that. That's totally correct. Yeah. Okay.
So yes, you do want to go through and put in the balance sheet amounts as well as the income and expense amounts all through here, right? And you just go down the line, right, of what you have there. And I'm just going to put a few in here because we're not going to actually do the importing process, but I'm going to show you a couple ways to do that, right? So we're just going to go through. I'm just putting in some numbers. Yeah, oops, that's a little too big. Right. Whatever it happens to be, make sure you use numbers and not text, right? But you would go through the entire trial balance and align that to your tax return, right? And then down here we have three outputs, right? So this output here is for Transaction Pro Importer, TPI, right? So this is the format that Transaction Pro needs, right? So as it's gone through, this trial balance tab, it will copy what's necessary into this output, right? So let's say you're not using Transaction Pro, you're using Sasant, right? So we've got a Sasant export as well. Or let's say you're using Right Tool Pro, right? So we've got 3 different outputs depending on how it is that you'd like to. One of the really cool tools or really cool features of Right Tool Pro is the ability to copy and paste a journal entry. So rather than going through the import process, which Transaction Pro or Sasant is going to need you to do, you can just essentially copy and paste this entire output and go back into directly within Right Tool and just choose the option to copy it in, put it in their interface, and then it will do the copying and pasting for you, right? So all you need to do for Right Tool is, again, just copy the output on the tab and then paste it into QuickBooks right there. So you never actually have to leave QuickBooks, with the exception of just doing this. You don't have to go into another tool, right? It's QuickBooks and this template, this Excel template, and then going right back into QuickBooks. Another thing that Right Tool does, because I had a quick call with Mark yesterday, is that for balance sheets, for the Pro tool, it allows you to make adjustments right there, and it will create the journal entry for you.
Yeah, right? That's awesome. I remember they were talking about that before. That's a newer update, and I have the paid Right Tool version, and it's so really
they do something very similar to this right in Right Tool, with the exception of the income and expense, right? So you could use this for the income and expense, and then just use the Right Tool Pro feature for the balance sheet, right?
And it said that Right Tool Pro is nice because you don't necessarily need to fix all of the accounts, like maybe one or two. Nancy has a question. Which is, this isn't always going to be the case because there's different types of tax returns, obviously. So like when you're dealing with Schedule C, there is no balance sheet, or we may be using a balance sheet, but they don't need to take that into consideration with the return.
Yeah. So you're going to need some moment in time. And typically that is, the tax return. But whatever it is that they want to be able to align to, you can get that and then put that in.
Because usually it's if they're, filing with the Schedule C and there isn't, a previous balance sheet to look at or something. Usually what I would do is I would, get the bank statements, credit card statements, loan statements, and make sure that I start the new file, or if I'm not cleaning it up or something, which isn't usually I do clean it up. But if I need to have the correct starting balances, you can just pull those right from the previous statements.
It's a lot more paperwork and a lot more gathering of, supporting documents to get that stuff. That's why, having it in a tax return. But good point, Nancy, as far as, those type of entities don't have a balance sheet on their return. It's usually, one-stop shop. That's typically what we want to have is one source of truth rather than a multitude of truths. But then at that point, you really just have, your preferred outcome output, right? And in the instructions here, we've provided links to, Transaction Pro or Sasant Online or Right Tool Pro. If you are using Right Tool Pro, Mark and Hector were nice enough to give us a promo code for the first year. So you get 20% off the first year by using promo code SOB, not SOB.
SOB. And anybody that doesn't know what Right Tool is, oh my goodness, it's just a whole bunch of neat shortcuts that save you a whole bunch of time. There's batching abilities, and you can batch delete out of a register, and just little things that should be in QBO, but they're not yet. So they've created all these neat little shortcuts that now we can't live without.
Yeah. I think Hector says just making QuickBooks usable again is his goal of there. And he what drives him crazy is repetitive tasks that cost him seconds of his life.
Yeah.
Right?
It could be done in 1 second instead of 8 seconds. That's literally how Hector Garcia is.
Yeah. And on the where did I have it here? There it is. Down in here, I actually do have Right Tools copy and paste option where it's kind of funny because he had to use his this is when he was going through his vocal cord surgery. So he actually recorded an AI voice of himself, so it does not sound exactly like the chipper version of Hector. It does sound a little slightly robotic because it is, but it does sound like Hector. It actually is a kind of an interesting experiment in AI. But he walks you through, or his robot Hector, Cyber Hector, walks you through this whole process of copying and pasting there. So that is a really good use of Right Tool Pro. Nancy is cheering on the Right Tool bandwagon as well. And we love it, love it as well. But this is, in a nutshell, the ability to tie, a starting point and just get your balances agree inside of QuickBooks, again, to draw that line in the sand and say, hey, we're not really worried about all of the details prior to this date. Let's choose this moment in time, because it's going to take you time and cost the customer who knows how much in order to rectify that and get things aligned. And typically that's not part of your engagement. If it is, great, by all means, go forth and clean up a mess. But this allows you to kind of push that to the back burner, find that moment in time that you and the client can agree that this is where we want to moving forward, and then go from there.
I will say though, if it's beyond really a bookkeeper's understanding, especially with regards to a higher level of tax involved, do make sure that you're at least their tax preparer CPA is on board with what's happening, and rather than just maybe making the executive decision on your own, do make sure that that's going to be okay with all parties. That's one thing that I do suggest.
Yeah, Nancy brings up a good question as well about, what if what's on the tax return doesn't match exactly what's in QuickBooks? That's a great question.
It won't.
Yeah, they may be calling it, checking parentheses last 4 in QuickBooks, and in the tax return they just call it checking. That's there. I guess in some cases that can be just a mental thing for you. Looking at the return and aligning that, or there may be some consolidation, right, where you've got some details in that are sub accounts.
Yeah, that's what I think she's talking about. If there's
rolling up into that,
and on the tax return, there's just one line. Yeah.
Understanding that you're either going to choose, the parent and just make the alignment to that. Just keep in mind, especially for income and expense, those are individual accounts. So even if you just make it to the parent, that's that's not going to, consolidate all of that. Just bear that in mind before, making one change or the other, or clean up the chart of accounts, to make them consolidated, and then, move them out after, which is totally fine as well. So there's a lot of ways to do things. That's kind of QuickBooks's double-edged sword, right? It's great because you can delete things. It's bad because you can delete things. So, so
that's why there's a endless amount of webinars and tips and education and all things to make sure that people out there are getting as much information as they can to use the software correctly.
Absolutely. So this is just a nice little tool, a resource for you in School of Bookkeeping, to be able to do those automatic reconciliations, so to speak, of reconciling a tax return to QuickBooks, to draw that line in the sand to allow you to make things in alignment, and then move forward from there. So we appreciate you joining us today. And next week, we'll actually have Sean again. We were supposed to have him today, where we'll be continuing our series of comparing QuickBooks Desktop to a cloud-based inventory solution like Katana, and we're going to be talking about just the generalities and the functionalities that are tied to building things inside of QuickBooks Desktop and comparing them to Katana's cloud-based solution. So we appreciate you joining, and we'll see you next time on the Workshop Wednesday. Have a great day, everyone.